Did you know that right now, while most of us are focused on grocery prices and gas bills, the IRS is quietly going through the biggest transformation it has seen in decades, and almost nobody is talking about it? If you've ever worried about getting your taxes right, or wondered whether someone on the other end of the phone actually has your back, then what you're about to hear matters deeply to you. Stay with me, because in the next few minutes, I'm going to walk you through exactly what's happening inside the IRS right now, what it means for your wallet, and how you can protect yourself. And if you find this helpful, and I think you will, please hit that like button, subscribe so you never miss an update like this, and drop a comment below telling me how tax season has been treating you this year. I genuinely read every single one. Now, let me paint you a picture. Imagine you've been going to the same local bank branch for 20 years. You know the tellers by name. You walk in, someone smiles, asks about your grandkids, and helps you sort out whatever you need. Then one day, you show up and the branch is half empty. There are fewer people behind the counter, the phone rings and rings with nobody picking up, and a screen in the corner tells you to use the app instead. That uncomfortable, slightly unsettling feeling. That is essentially what is happening with the IRS right now, and millions of Americans, especially those of you who rely on personal service and trusted guidance, deserve to know the full story. Let's start with the numbers, because they are genuinely staggering. At the beginning of 2025, the IRS employed approximately 102,000 people. By early 2026, that number had fallen to roughly 74,000. Think about that for a moment. That's nearly 28,000 fewer employees, people who answered phones, processed returns, reviewed documents, and helped everyday taxpayers navigate one of the most complicated systems in the world. This isn't a small trim around the edges. This is a dramatic, sweeping reduction that has happened faster than most people realize, driven by the Department of Government Efficiency's push to streamline federal agencies. And while the idea of a leaner government might sound appealing in the abstract, the reality on the ground is already being felt, and the National Taxpayer Advocate, which is the independent watchdog inside the IRS whose entire job is to look out for regular people like you and me, has raised serious and formal concerns about whether the agency can still adequately serve the public during this filing season. Here's something that gives you a sense of just how stretched things are behind the scenes. The IRS has had to move back-office employees, people who normally handle processing and administrative tasks, and place them on what are called involuntary details through June of 2026. In plain English, that means they are being reassigned, against their usual roles, to handle frontline filing season work that there simply aren't enough people to cover. It's a bit like asking the chef at a restaurant to also wait tables and wash dishes because half the staff didn't show up. The food might still come out, but it's going to take longer, and something might get missed. Now, speaking of things getting missed, or rather, things being deliberately taken away, let's talk about a program that many of you may have used or heard about and were perhaps looking forward to. It's called Direct File, and it was the IRS's own free, government-run electronic filing system. Last year, it was available in 12 states and had been celebrated as a genuine breakthrough, a way for ordinary Americans to file their taxes directly with the government at absolutely no cost, without needing to pay for software or navigate confusing third-party websites. The plan was to expand it to 24 states this season. But if you go to the Direct File website today, you will find a simple, quiet message: the program is closed. That's it. Gone. The administration has officially discontinued it for the 2026 filing season and is directing people back to private sector tax software or the IRS free file partners, which, it's worth noting, have their own limitations, eligibility requirements, and yes, the potential for upsells and confusion. For those of you who were counting on Direct File as an easy, trustworthy, no-cost option, this is a real loss. And it's the kind of change that tends to hit seniors and fixed-income filers the hardest, because you often don't have complex returns, you just want something simple, honest, and free. The elimination of this program is one of those quiet policy shifts that never quite makes the evening news, but affects real people in very real ways. So where is the IRS putting its energy, if not into customer service and free filing tools? The answer, increasingly, is technology, and specifically, artificial intelligence. Now, I know that phrase can sound a little cold and futuristic, so let me break down what this actually looks like in practice, because it affects you directly. The IRS is currently running more than 100 active AI projects. 100. These include voice bots and chatbots that are being designed to replace the live customer service agents who used to pick up the phone when you called with a question. So instead of speaking with a human being who can listen, understand context, and use good judgment, more and more taxpayers are being routed to automated systems that work from scripts and algorithms. Now, on the enforcement side, and this is where things get particularly interesting, the IRS is actually doubling down despite the staff cuts. The agency is using machine learning to become much smarter and more aggressive about selecting returns for audit. Specifically, the focus is on high-income earners making over $400,000 a year, and on complex business structures called pass-through entities. But here's what affects everyday filers too: new AI-driven systems are doing a much more thorough and aggressive job of flagging mismatches. What does that mean? It means if the income reported on your W-2s, your 1099s, or your K-1 forms doesn't perfectly match what's on your tax return, the system is going to catch it, and catch it faster than ever before. Years ago, some of those discrepancies might have slipped through simply because there weren't enough human eyes to spot them. Today, a computer is checking every single line, every single night, without getting tired. This is why I always tell people, and I really mean this with the warmth of a friend who's been around the block, please double-check your documents before you file. Make sure every number matches. If you received a corrected 1099, use the corrected version. If something looks off, address it before you submit, because the days of things quietly slipping through unnoticed are, for better or worse, coming to an end. Now, let me shift to something that is genuinely good news, because this story isn't all clouds. There are some real silver linings tucked into the 2026 filing season, thanks to provisions from something called the One Big Beautiful Bill Act, which introduced some meaningful changes to the tax code that went into effect for this year's returns. First and most importantly for most of us, the standard deduction has gone up. For individuals filing on their own, the standard deduction is now $16,100. For married couples filing jointly, it's $32,200. If you're not someone who itemizes, and statistically, most seniors don't, this is a direct, tangible benefit. A higher standard deduction means less of your income is subject to tax, plain and simple. Second, there are new provisions that eliminate taxes on tips and overtime pay. Now, you might be thinking, I'm retired, does that apply to me? Perhaps not directly. But if you have children or grandchildren working in service industries or putting in extra hours, this is meaningful relief for them, and it's worth knowing about and sharing. Third, and this one is particularly significant if you live in a high-tax state, the cap on the state and local tax deduction, commonly called the SALT deduction, has been raised dramatically. It went from $10,000 all the way up to $40,000 for eligible filers. For years, this cap was a source of enormous frustration for people in states like New York, California, New Jersey, and Illinois, where property taxes and state income taxes can be very high. If you itemize your deductions and you live in one of those states, this change could make a meaningful difference in what you owe, or what you get back. So here's where we stand as you head into this filing season. The IRS is operating with significantly fewer people than it was just a year ago. A beloved free filing option has been quietly discontinued. AI is increasingly driving both customer service and enforcement decisions. But at the same time, the standard deduction is higher, there are new protections for workers' tips and overtime, and the SALT cap has been substantially raised. It's a mixed picture, and one that rewards people who stay informed, stay organized, and don't make assumptions based on how things worked 5 or 10 years ago. The world of taxes is changing fast, and I believe that the best thing any of us can do is stay curious, stay engaged, and keep asking questions. And that's exactly what we're going to keep doing together, right here on this channel. Let me bring this home for you now with a few closing thoughts that I think will leave you feeling prepared, confident, and ready for whatever comes next.